Okay, and it's time for Savannah Resources. Okay, Savannah Resources is an AIM-listed lithium business with development stage assets in Portugal and Mozambique. It has a market cap of £74 million. On the 12th of January, Savannah announced a potential agreement with Galp, the Portuguese energy group, regarding project level investment and a substantial lithium offtake contract in the Mina de Barroso mine project, a key step towards commercialization. Savannah also have a stake in the Mutamba JV in Mozambique, an undeveloped mineral sands project in partnership with Rio Tinto. I'm delighted to be joined tonight by David Archer, CEO at Savannah Resources. Over to you, David.
Good evening, and good evening to London South East, and thank you for the privilege of being able to present tonight and introduce Savannah to your audience. So thank you.
It's our pleasure.
I'll just share the screen. Okay. Savannah, AIM listed, and what I'd like to talk to you tonight about is our Mina de Barroso project in northern Portugal. It is unique in the European setting. It's Europe's largest conventional resource of lithium, and we're bringing the project into operation at exactly the right time, as there's an enormous surge of demand for the material to power electric vehicles, which are being introduced widely in Europe as we speak. This is the disclaimer. As I said, largest conventional lithium project in Europe, and I think the thing that we're really sort of focused in on is the fact that what we have in Portugal is very much an analogue of the what's happened in Australia. Australia is the largest sort of global producer of lithium, and it's effectively altogether based on a very similar project to the one like our own. Production of spodumene, lithium, open cut mining, production of a concentrate, which is then utilised by conversion plants to produce a hydroxide material. This can be a very significant mine for Portugal. It's a small mine in mining industry terms, but it punches above its weight in terms of what it can actually do around the elimination of CO2 emissions. Lithium from our mine could power anything up to 500,000 to 600,000 electric vehicles per annum. I think the key thing, in terms of the takeaway for people looking at this tonight, is the fact that 2021 got off to a fabulous start. We launched with a landmark deal with Galp, which is it's actually Portugal's second largest company. It's got a market capitalisation of over 7 billion euros. It is an oil and gas company making a transition into the energy transition. And we announced a partnership with them, and that will sort of help to sort of fund our operations from here, and it's complemented by an offtake. They will become a customer for our material for about half of our production. Mina de Barroso is an operating mine at the moment. We produce quartz and feldspar, but we believe it's the nucleus or the core for the development of other lithium opportunities in Portugal. The Portuguese government is 100% behind the development of this wonderful sort of mineral endowment that Portugal sort of features, and we believe that there's considerable sort of further exploration potential in Portugal. Our position as being perhaps the most sort of senior member of the lithium industry in Portugal are well placed, we believe, with the tender, and of course the association with Galp really sort of underscores our capabilities. We think there are wider opportunities as well in the broader Iberian Peninsula, and of course the partnership with Galp demonstrates the sort of appeal of a project like our own. Just focusing in on where we're at. The project's clearly in Portugal. We're in the northern part of Portugal, and it's a great place to have a mine. It's very well endowed in terms of existing infrastructure, dual carriageway, expressway, leading right down to the port of Porto. Porto is actually the second largest port in Portugal. It's the second largest city in Portugal. The northern part of Portugal is endowed with an enormous amount of renewable energy production, principally from hydro and wind, and that's really sort of a key element in the Mina de Barroso story. You know, we'll be able to produce a low carbon footprint product, utilising the renewable resources in northern Portugal. Portugal's a first world country. It's got a fantastic education system. It's got a lot of enthusiastic, highly trained young people, and the cost setting is certainly more favourable than it would be in Australia, for example. Just coming back for a moment to Galp, we announced this agreement a couple of weeks or so ago. Galp will be investing 6.4 million to earn a 10% interest in the Mina de Barroso project. There's certainly potential for that to increase, but importantly, it came with a offtake contract. They'll be taking around about 100,000 tonnes of spodumene concentrate per annum from the mine. That's about half of our production. And really the appeal of the collaboration with Galp is that not only does it provide offtake, and this is the first spodumene offtake agreement signed for a European project. It's really a major milestone, and I'm delighted that our executive was able to bring this deal to our shareholders, but it also comes with investment as well. So it's a very, very powerful alignment, and of course, you know, very much strengthened by the fact that Galp has a very large balance sheet. It has strong cash flow, and importantly, it's very much aligned to deliver its ESG objectives, and in fact recently was awarded, I think they won the sort of third, they were third in the global index of global sustainability as awarded by Dow Jones. So, you know, a wonderful sort of validation of what we're doing, and gives, I think, investors a sense of, you know, a very long-term approach to this project, and a long-term approach by sort of Galp to sort of looking at opportunities in the Iberian Peninsula. Just quickly about EVs, and we've really seen over the last 12 months, despite the effects of the pandemic, a very sort of marked increase in EV sales. Of course, a lot of that's been promoted and on the back of government legislation. But I think what we're also seeing now is a sort of very major expansion in the product ranges EV product ranges now being offered by the OEMs, the global car producers. So there's a much better choice for consumer. At the end of the day, no matter how much government support, if consumers don't want to buy it, they won't. And but, you know, we're seeing evidence of that. And in fact, Europe, you know, clearly, you know, will be the second largest EV region globally, as effectively a trading bloc. Our project is right in the middle of that trading bloc, right in the middle of you know, one of the biggest markets in the world. So we think we're very sort of privileged, and yet there are very few, in fact zero, developed resources of lithium. And so, and the best one, and the most conventional one, and the most latent one is actually owned by Savannah. So, you know, we sort of see the world sort of coalescing around these trading blocks, Australia and China effectively. Australia providing the raw materials, China doing the processing. And in our case, Mina Barroso doing the raw material supply and being sort of consumed by the OEMs. So we are terribly well placed, I think, as we sort of see surging growth. And I think what we've also seen with this emerging growth is that a marked increase in the value of listed lithium equities. The equity capital markets, particularly in Australia and the United States, came early to this. They were alive to this very early on, and we've seen sort of remarkable price increases in uranium equities, particularly in those two markets. I think that was sort of probably highlighted by the fact that we've seen the lithium price sort of bottom in 2020. It started moving up in late 2020, and it's moved up from around about $350 US a tonne for spodumene concentrate up to around about the mid 400s, if you can get it. I'm quick to say that don't try and get spodumene concentrate from Australia, because it's sold out. It's fully committed. And there's some really rising anxiety in the minds of the lithium value chain as to where will this vital strategic metal, lithium, where will it be coming from? Where can they get it? And that clearly sort of puts us in a very sort of wonderful position to at least help out, but not totally solve the sourcing requirements of Europe. And of course, spodumene lithium actually is the sort of the key mineral that goes into the production of lithium hydroxide. Lithium hydroxide is the key chemical that goes into the production of cathodes, which are the electrodes that go into batteries. The cell manufacturers have been building cell manufacturing plants in Europe furiously. The mining industry hasn't quite sort of stepped up and hasn't really been building lithium mines quite as furiously, but we'll certainly be busy building our own. I think that the context is also very important. We think being in Europe is very sort of key. Europe is absolutely intent on delivering on its carbon reduction targets as in order to combat climate change. There are very sort of significant legislative mandates around sort of achieving that. And Portugal also sees an opportunity coming from this. They have a wonderful lithium endowment. Portugal sort of sees the opportunity for the development of new industry, clearly mining, but also downstream industries such as the production of lithium hydroxide. And perhaps cell manufacturing as well. The government has a sort of clear and enunciated lithium development strategy, which was put in place, announced in 2017, and they're looking to release sort of further ground in the second half of this year, which we believe much of which is highly prospective and certainly will be tendering. We're also seeing sort of manifest support from the European Commission as well. The European Commission has been very alive to this sort of looming supply crisis to support the development of indigenous supply in Europe. And in fact, the United States has also sort of recently started looking very sort of seriously at the resources, the lithium resources that are effectively available to sort of countries that are sort of part of the Western Alliance. So a really strong thematic with a strong sort of following wind. Just about the resource, I've got a 27 million tonne resource of lithium. We think there's plenty of upside for further resource. Importantly, we've got a granted mining lease. It was granted in 2006. has a 30-year mining life. We're mining there at the moment. We're drilling, we're blasting, we're producing quartz and feldspar for the local sort of ceramics industry. And what we're looking at doing is sort of expanding the scope of that mining lease to encompass more value-added processing and an expansion of mining rates. We're looking at an open-cut mine development, a very sort of conventional mining approach. And we're in the latter stages of completing the sort of securing the sort of permissions to allow that expansion by way of a change to our current operating license. Next page. This is just a little bit of an outline of the project itself. You can see this operating lithium quarry here. We've undertaken a very extensive exploration program, over 30,000 metres of drilling. It is the largest resource in Europe. It's all at or near surface. It's well graded and very easily mined in conventional mining terms. I'm conscious of running out of a little bit of time. It's also a very sort of conventional processing plant. We'll be looking to sort of piggyback off all of the know-how and knowledge that's been developed in Australia around the development of spodumene mines exactly like this. We're not into doing anything novel. What we're into is employing techniques that are well proven and de-risked. Also quickly, these results were announced a couple of years or so ago in terms of, and broadly sort of outlined some very sort of compelling economics for the development of the mine. Since then, we've looked to slightly expand the run-of-mine mining rate from 1.3 million tonnes per annum up to around about 1.5. But I think an important takeaway for everyone on this call is the fact that as the likelihood is that we'll be selling the majority of our production in Europe, that will sort of eliminate the sort of transport charges to Asian markets, and we believe that will help to sort of increase the NPV and further increase the economic attractiveness of the development of the project. This is just a little diagram to sort of illustrate that we believe we've got line of sight in terms of taking the resource from 27 to 50 million tonnes. And here is just really, I think, an illustration of the milestones we've achieved. We secured the project in mid-2017, and we've really undertaken a very sort of fast-paced program of exploration, evaluation, resource development, and economic analysis, and of course topped off in the last couple of weeks with the deal with Galp. We believe that there will be a number of refineries to process spodumene lithium in Europe, and I think that's been a sort of very major change over the last 6 months as well. There are good, solid developing customers in Europe. I think there was a question a little bit earlier about where I might see the share price of Savannah going. It's probably a bit difficult for me to answer that, but I think this slide at least gives an indication as to what the potential might be. We're sort of trading at around about 0.4 of market capitalisation to NPV. We believe that as we sort of continue to sort of de-risk the project and we complete our DFS, which is underway at the moment, that will accord us a higher ranking. And interestingly enough, a company with an identically sized resource of spodumene lithium in the United States has been accorded a really very handsome sort of valuation, and so I hope that sort of puts it all in context. I'll just sort of quickly brief a couple of things. One of the big focuses for the company is our environmental and social side of things. We believe that there are sort of compelling environmental, economic, commercial, demographic reasons for the developing this project. We've got a very comprehensive benefit sharing plan that we're developing at the moment, and we hope to sort of launch in the next month or so. We're working closely with sort of communities and stakeholders, and we're looking forward to being a responsible and successful corporate player in Portugal, and working closely with communities and stakeholders. So that's about it. We think we've got the best lithium project in Europe. We think Europe is probably one of the sort of the premier jurisdictions in the world to have one. We're full of enthusiasm. We've got rising lithium prices, rising sales of electric vehicles. We think it's the right project at the right time, in the right place, in the right decade. Thanks.
Thank you very much indeed, David. Let's get straight to the Q&A. The questions are flooding in from the audience. Let's start with Galp, clearly fundamental to your future. What are the next steps? You've got a heads of agreement with them. When does that become more formal?
Well, they're undertaking due diligence at the moment, extensive sort of due diligence at the moment, and we sort of hope that will be concluded over the next couple of months. Then there will be sort of documentation. So, we're probably looking at a sort of three month sort of period to sort of conclude the arrangements with Galp.
Fantastic. So a very busy time for you, because you've got a feasibility study which you're working on currently. What's the likely timeline for that being completed?
Looks like sort of second half of the year. A lot of the elements in the feasibility will sort of really depend upon the outcomes of the EIA. We've put in a couple of development options, or 3 development options in the EIA. The regulator is reviewing those at the moment, and depending upon which option is sort of chosen, that'll sort of help more precisely define exactly the layout of the project. So anyway, second half of this year is the DFS timeline.
Okay, and Andrea Scott has asked a similar question to myself. She's interested about the environmental impact assessment, which I understand you started May 2020 for Barroso. At the time, you said it was expected to take 10 months. These often slide. What's the latest date you expect to hear back? And because obviously the environment is just such a big issue in terms of mines.
Yeah, well, we're very proud of what we delivered with the EIA. We believe that we've either eliminated impacts or reduced the impacts to the point where they're no longer meaningful. So, this is, as a mining project, I think it's very hard to be sort of critical of it, I think. But we sort of recognise that it's important to present something that that's really sort of leading in its approach. And there are a number of features to our plans which I think will really distinguish what we're doing, and I think this will become a real sort of showcase as to how modern mining can operate in a first world jurisdiction. But apart from that, in terms of timing, we're dealing with a series of questions that have been put to us by the regulator. Once they're answered, we'd anticipate moving into a sort of period of public consultation, which takes about 45 days. So, we're probably still a few months away from confirmation of the EIA decision.
So you see it as a good sign that the regulator are engaging?
Well, I think it sort of illustrates the rigour of their approach and their professionalism, and we've been impressed by the depth of their analysis and the way they've sort of conducted their evaluation. So, there's certainly no shortcuts that we can sort of observe being taken, and it's a very sort of fulsome and serious analysis by the regulator.
And the local communities in Portugal, how have they taken the news?
I think there are sort of varying views. There's the majority of the people in the region, I think, are are excited about the opportunity of having a new major economic development for the region. It's going to bring enormous benefits, in terms of employment. It's going to really reinvigorate the local economy. It's going to sort of recharge local businesses, which have really suffered grievously as a result of the pandemic, and really add a little bit of sort of resilience to the area. Of course, there are always some people who don't like what you're doing. Doesn't really matter whether you're renovating your house. Generally, there'll be someone in the area who doesn't particularly want to support what you're doing, and mining is no different to house renovation in here in London.
Okay, that makes a lot of sense. Okay, let's move on from Barroso. A general question from Chameleon Man. He asks by email whether Savannah Resources would consider a dual listing in the US. He says it certainly hasn't done EMH, European Metals Holdings, any harm, he says. Might that be on the cards?
Well, we're certain, as I've sort of pointed out during the presentation, I mean, there's been an enormous increase in the value of lithium stocks, both in Australia and the United States. There is a valuation gap, and I suppose that's an opportunity for UK investors with Savannah. But it's really incumbent upon the board and myself as chief executive to see is there an opportunity there for us, and so that's one thing. And but I think it's got to be evidence based. But certainly it's very encouraging. European Metals has now sporting a very handsome market capitalisation. We've sort of seen sort of large slabs of equity raised by Piedmont in the United States. And of course, Australia has a very vibrant and probably the deepest market for lithium stocks globally. So it's a good point, and having a board meeting tomorrow, and certainly I'll take that message to the board tomorrow.
Okay, let's move to Mozambique. We're certainly cracking around the world tonight. Could you update us on what's happening with Rio Tinto? Where is the JV at the moment?
Sure. Well, we're earning a 35% interest from Rio by undertaking a preliminary feasibility study, which is underway at the moment. We were awarded our final sort of mining lease early in 2020, and we're started up some of the baseline studies. We're doing commissioning an environmental group to kick off the environmental study, and we're undertaking a landowner analysis as well as at the moment, and sort of pulling all the elements together on the PFS. We work closely with Rio. They're a wonderful joint venture partner, and really bring a perspective that perhaps doesn't have. And of course, Rio is one of the biggest producers of sort of titanium sort of feedstocks sort of globally, and have the Richards Bay facility just south of the Mozambique border on the east coast of Africa. So the project's sort of building momentum, I think, is probably sort of the key phrase around that.
So sometimes when a smaller player gets into bed with someone as big as Rio Tinto, things can be a little bit out of kilter. How has that relationship gone? If they are the giant and you are the minnow, as it were, has it worked? Is it working out okay?
Yeah, no, it is actually, and I think they sort of respect our professionalism, our application, and I think it's an illustration that Savannah does punch above its weight. We mightn't have an enormous executive infrastructure, but those executives we do have are very able, capable, dedicated, and hardworking. And so I think Rio actually prefers us to be sort of in charge of this project.
Okay. David Rogerson asks a cheeky question. You sold 2 million shares in November. Do you have any regrets?
Well, I'd like to have a whole lot more. I have a series of options which are expiring in February, so I hope that they go over the share price goes over the exercise price. So we'll see. We'll see.
Okay, sorry, that was a bit of a low curve ball there. Andrea Scott asks a general question: how much lithium does the world hold? How much is there to be mined? How much has been discovered to this point?
Yeah, well,
to what extent is it a rare metal?
Well, it's not particularly abundant. It's not as abundant as iron ore and things like that. But the key to all mineral resources is finding them in economic concentrations. That's the sort of real key. And of course, having something that's reasonably able to be developed. One of the sort of the key impediments, I suppose, to mineral supply is that the lead times on new mine developments run from 7 to sort of 10 years plus. So you just can't snap your finger and sort of bring production online overnight. So I think that's one of the keys of our project, that we've put the hard yards in. It has been a lithium winter in 2018 and 2019 and the early part of 2020. But this is the lithium spring, and I think the mid-2020s is just going to be a long, warm summer for lithium producers like Savannah, I think, or at least I hope so anyway.
I think a long, warm summer is a good point for us to end the Q&A on, David. Thank you very much for joining us. You've been a complete star. Thank you so much. And we got through a lot in a short time there, so well done.
Thanks, Tom.
Okay, fantastic.